How to earn up to 25% APY on your HODLed Bitcoin. 2022 has been the perfect storm for the crypto industry. Culmination of changing interest rate regime, high leverage and lax risk management led to multiple disasters in the crypto world this year. On June 13th, there was a bloodbath in the crypto market with almost all major cryptocurrencies including the likes of Bitcoin and Ethereum were down by 20%. This fall was a part of a larger 70% decline in the first half of 2022. And now FTX, one of the poster boys of crypto, has collapsed in a stunning turn of events. Safe to say, a lot of people have been completely shook by these developments. A long crypto winter has descended, and it doesn't seem that it's going to pass anytime soon. Despite that, many true crypto loyalists, like myself, have held on to their investments until now with conviction that, like in the past, crypto will rise again and surpass the previous highs in future. These people are referred as the hodlers. The concept of HODL. While many crypto loyalists agree to the fact that cryptocurrencies like Bitcoin are highly volatile and subject to dynamic fluctuations, they still prefer to HODL, hold on for dear life. HODL has become a mantra for crypto investors, which simply denotes their long-term approach toward crypto investments. But when should an investor HODL? Now, always, and forever. An enthusiast who believes in HODL strategy continues to hold on to their assets, even if the market crash is inevitable. For instance, several investors did HODL their crypto assets despite the bloodbath mid-June 2021. That is a fall from $60,000 to $20,000. There are multiple benefits of hodling. It is quite apparent that people who bought cryptocurrency a few years back got great rewards in the long run. However, it is also true that there has been a period of great volatility when the cryptocurrency prices crashed, and the media bashed it to no end, leaving investors with anxiety and self-doubt. Many crypto investors even tend to acquire some more crypto, even while they HODL their initial assets. But the current yields on these assets are very low, pegged at 1% to 4%. This makes Snowball a better bet than conventional yield farms or liquidity pools. Understanding Snowball. Snowball is a remarkable product that offers to mitigate the investment risks during the crypto winter by providing up to 25% APY on investments if Bitcoin does not fall by more than 35% at a time. The potential to offer higher returns at moderate risk makes the product stand out in the market. Snowball has already recorded $7 million worth of in subscriptions in the past 5 months since its launch, along with recording good returns simultaneously. We already have a detailed analysis video of Snowball. Link is in description. Astonished by Snowball? So let's talk about a step ahead. Pledged Snowball, a product for Bitcoin and Ethereum hodlers. What if I told you that if you are hodler, then there's another product that goes up and beyond the offerings of Snowball? You heard it right. Pledged Snowball is the name of that product. Hodling is a great strategy in the long run, but there can be no two opinions about the fact that it's psychologically tough to go through the sharp fluctuations in the market. Pledged Snowball is a product that can help to smoothen the ride by stabilizing the returns. What is a Pledged Snowball? Snowball is a great product that offers high yields in bearish, sideways, and even mild bull markets. The large downside protection range up to 35% where the investor can accrue yield makes it an ideal substitute for any fixed income product. For people who already own BTC, a variation of Snowball called the Pledged Snowball allows investors to pledge up to 40% of their BTC holding and acquire Snowball products for that amount without requiring any extra tokens. In this innovative product, the investors are offered a free Snowball product with about 30% to 40% of the Bitcoin market value being pledged. The investors tend to benefit on two fronts: 1, the upside benefit that comes with holding Bitcoin, and 2, receiving an additional free Snowball fixed coupon product. How can I get returns without buying Snowball? The pledging of BTC gives access to margin, which is utilized by traders to create and hedge the payoff for the pledged Snowball, hence no extra capital is required. Salient features of the products. Some features of this product which makes it unique and an attractive proposition are: 1. You don't need to deploy any new capital, just use the crypto you already have and get access to the benefits of Snowball. 2. Achieve high fixed returns in the current low-yield environment. 3. The pledge will be only up to 30 to 40% market value of your holding, thus avoiding the margin call trap in the bear market. 4. You will be able to get returns on your underlying assets and the fixed yield on the snowball, which makes the investment desirable in all market conditions. 5. This product also allows leverage up to 1.5x on their current snowball offering by pledging, which further enhances the returns. Risk-return characteristics of Pledged Snowball. If you look closely, you will realize the risk and return performance of Pledged Snowball is exactly like the original Snowball product. The only difference between the two is that in the former, you can use your existing crypto holdings to deploy and get the yield, while in latter you need to purchase the snowball using new payment, USDC. EasyCoins takes a very conservative pledge ratio to ensure that the pledge remains stable during the product tenor. The investor can deposit BTCF or USDC in the pledge pool. The worst scenario is that the assets in the pledge pool will take the loss of the snowball product. The snowball product will not lose more than the underlying spot price itself. If the price never falls below 65%, you will be guaranteed to receive positive returns. Investment process. Purchasing the product. Investors can purchase the Pledged Snowball with one click on the Snowball purchase interface. There are two options available for investors, viz. deposit assets in the pledged pool or directly buy the product. The pledge pool will calculate the credit limit for the snowball product purchase automatically. Risk management of pledging pool. BTC, F, and USDC are accepted in the pledge pool. Once the investors have transferred the assets into the pledge pool, the dynamic calculation for the risk ratio of the pledge will be calculated. The investor would be able to see how much capital is available for withdrawal. If there is substantial adverse market volatility, the investor might have to deposit more crypto to avoid margin call. Benefits of Pledged Snowball for crypto owners. The Pledged Snowball product is exclusively designed for investors who believe in hodling and want to make the most out of the current crypto winter. Benefit for miners. If you are into crypto mining, you will realize that it makes no sense to sell crypto in a bear market. It is only profitable to sell it during a bull market to make it a profitable endeavor. However, the sad part is that there is a monthly fixed cost associated with crypto mining, which includes electricity bills, infrastructure maintenance costs, salaries, rent, and other miscellaneous expenditures. This leaves most crypto miners with few options, and none of them are attractive. Either they sell a part of the crypto in loss to meet the fixed cost requirements, or they stake/lend the crypto to get extremely low yield. The low yield is also not risk-free, as we have seen lately with the debacle of large lending platforms like Celsius Network and Vault. Here's where Pledged Snowball can come to their rescue. The product offers high fixed coupons without any extra investments. This consistent cash flow can help them to meet their periodic cash flow requirement. They just need to pledge their holding and get a yield that can be as high as 25–30%, which is way higher than what they get on any other platform. Benefit for hodlers. Large investors in crypto are aware of how frustrating crypto winter can be. On one hand, their assets have declined considerably, and on the other hand, they lose opportunity cost on the capital they have deployed, which is stuck in crypto assets. Pledged Snowball helps such investors to generate high yields from their assets, which can make the hodling period more pleasant and stop investors from taking impulsive decisions like selling crypto at the worst possible time to generate yield or meet cash flow requirements. Benefit for yield hunters. Earlier, several snowball investors benefited by investing in the said product. Some people are looking to further juice up the coupons. Such investors can benefit from Pledged Snowball, which offers a higher leverage of up to 1.5x when compared to Snowball. This essentially means they can get up to 25% plus APY using the Pledged Snowball product. Pledged Snowball offers a unique avenue for long-term crypto investors to earn fixed income without worrying too much about the risks associated with the market. The product is a financial innovation to solve the dilemma hodlers have been facing for a long time during crypto winters, not knowing how long they need to wait before they get any return on their capital. A product that gives yield and consistent cash flow on long-term assets was the need of the hour. Hence, Pledged Snowball could play an instrumental role in roping big financial players toward the crypto industry.